so far, this rate cut by the Fed has been received very favorably. The stock market is hitting all-time highs. Mortgage rates are continuing to decline, and the Fed is projecting more rate cuts. The Fed, to the surprise of some, decided to go with a jumbo rate cut the other day. Now, in response today, the stock market hit a new record all-time high and mortgage rates are dropping closer to 6%. Now, in this video, we're going to discuss the early response to this interest rate cut by the Fed and what we can expect moving forward. Now, before we continue, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The S&P 500 and the Dow have been flirting or hanging around all-time highs, and yesterday when the Fed made their decision, the stock market actually moved down. It was a volatile session yesterday, so the Fed made their decision. They made the statements afternoon. The market kind of popped up right away, but at the end of the day, it was actually down. Now, with a full day, a night to digest everything that the Fed said, the market moved up today, and it actually hit all-time highs. It's a good thing to see the stock market trending in this direction for all investors for obvious reasons. And typically when it comes to rate cuts, it typically is a good thing for the stock market, because for companies it means lower borrowing costs, their profits can increase because of this, and typically it does take the stock market a day or two to kind of pick a path when a big event like a rate cut or a rate hike, or some big economic thing happens, or a major company does earnings and it's to the surprise of the market. It typically does take like a day or two for the market to find its path, but obviously a rate cut is generally a good thing for the stock market. The stock market today responding as such. Now, there are times when the stock market will, they'll look at a rate cut in a negative way, and what I mean by that is they will see the Fed cutting rates because they are worried about what's going on in the economy. But Jerome Powell, kind of a master with his words, the statement that he made afterward was the United States is in a good place, and with this rate cut we are trying to keep it there. And that might sound like a small thing, but little statements like that, when the Fed does speak, it's just kind of picked apart. If he would have made the comment differently, if he would have said, well, we see the labor market struggling and we are trying to help out right now, if he worded it a little bit different, it literally could have been taken completely different. You could have seen stocks drop because investors would see the Fed worried about the economy. Now, he walked that fine line. He basically said the economy does look good and we are trying to keep it good, and the stock market obviously loving the rate cut, the jumbo one. Now, companies do have to deliver at this point, because the valuation of companies is already up. Companies, their valuation compared to earnings is pretty high, if we're being honest. And now, especially with a rate cut, knowing that interest payments and borrowing costs are going to go down for a lot of these major companies, investors, they're going to be looking at this point. They have to deliver on profits. They have to make more money because there's more money to go around. And so this next earnings season, it's going to be an interesting one. Profits and obviously the outlook looking forward is always important. If you ever wonder why this company made all these profits, they beat estimates, why did it go down, a lot of times you gotta watch what did they make as far as statements, what is their outlook the next quarter or the one after that. If they sound worried, investors sometimes pull back. It's things like that you have to keep in mind. But at this point, with a jumbo rate cut in place, knowing that borrowing costs are going to be down for companies, they have to deliver with good profits in their next earnings season. And mortgage rates are continuing to drop as well, inching closer to 6% as far as the rate for a 30-year mortgage. Now, we have to understand that just because the Fed cuts rates by 0.5%, that does not mean that mortgage rates everywhere automatically drop by that same amount. That's not how it works. I did the video recently about the Fed fund rate, what that is, what it means compared to the prime rate, which is a rate that mortgage, auto, and credit card companies use to base their rates off of. If you're still a little confused about or just don't know about it or whatever, maybe check out that video just to get familiar with what the Fed fund rate is, how it affects the prime rate and all these other rates. Now, mortgage rates have been moving down even before this cut by the Fed, and in anticipation of the cut. And mortgage rates are set by the individual lenders. Different banks, they could cut rates, hike rates, however they want to. That is their decision. But generally, obviously the rates are moving down, the market's moving down. Mortgage rates are as well. Just a welcoming sign. Just for reference, the other week, mortgage rates hit a low point over the last year and a half. It was at 6.2% was the average 30-year mortgage. Well, at the end of, I guess not the end of this week, but at the end of today, which marks the end of the week of how they calculated, it is down to 6.09%. So again, just inching closer to 6%. And this is a trend that we can expect to continue to happen. Nobody's promising 2-3% mortgage rates. The Fed's going to continue to cut, and that should spill over into the mortgage market. We might see 5% at some point, maybe 4% if you're talking a couple years down the line and we continue on this economic cycle. But as of right now, inching closer to 6%, which is, hey, we'll take it. It's better than 7%. It's good for buyers. You got to also understand it does not affect prices. The Fed cannot control the price of a mortgage. That's more a supply and demand issue, but mortgage rates dropping, always a welcoming sign for home buyers. And ultimately, so far, this rate cut by the Fed has been received very favorably. The stock market is hitting all-time highs. Mortgage rates are continuing to decline, and the Fed is projecting more rate cuts in the future. Now, we have to wait and see the full economic effects and what this is going to mean for the long term, but so far it is off to a nice start. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.